All right. Um, do you have your Mark Minervini book? We're gonna talk about chapter two today, I think. All right. So chapter two, what you need. Did we talk about this one already? Only okay. So probably not. I think yeah. Chapter two, I don't think we talked about. Hold on a second. I think we did. Okay, let's go to chapter three. So he's talking about specific entry point analysis, the SEPA strategy. Um, In the second line, when stocks were trading near their historical lows, I figured there had to be bargains. I didn't have much success with that approach, right? So he's talking about buying on the low side. And then last sentence in the paragraph, I did, however, see many stocks hit 52-week high lists and then skyrocket even higher in price. The question becomes, what differentiates the high flyers from the duds, and is there a way to identify the big winners before they become big winners? And then he talks about in the next paragraph, he talk about how he, you know, in the past, in the old days, he go get lots of books from the library, and then he even photocopy it and read it and study it. Um, oh yeah, we kind of talked about this last time. It's the first part, and then he studied like two books, and then he come to realize that there's 3 points. There's a right time and wrong time to buy stocks. Stocks with super performance potential are identifiable before they increase dramatically in price. By correctly investing in this stock, it's possible to build a small amount of capital into a fortune in a relatively short period. So, yeah, last time we kind of talked about this a little bit. I think, you know, it's very relevant to where we are today. Um, like the right time, wrong time to buy stock. So, you know, a super performance stock comes out of bear market will start to rise, usually lead the market, and that's usually when you want to buy. And then when the um eventually it will slow down in growth, either in earnings or in sales, and that will lead to lower earnings over time, and that will be the time to start to let go, right? So, usually when things look the best, especially after like many quarters of growth, and you think like, oh, it can never stop growing, it'll just keep going, and then eventually that's the peak, right? So we have to be mindful of the right time and wrong time. So and then it talks about how to that you can identify before that happens, right? The big run happens, and I'm reading chapter 4 right now, and he gives lots of examples about this. And number 3 point here, you can turn your small amount of capital into a fortune in a short period. So also chapter 4, he gave lots of examples about how some stocks can go up 4, 5, 6, 7, even more, many times over in a 1 year, 2 year period, right? So you can turn whatever small amount you have into a big amount. That's assuming you can do this properly, right? So that's very important. He talks about the melting pot on page 29. Over the course of my trading career, um, the work have inspired me. And he talked about this one book about relative strength concept of common stock price, focusing on strength instead of buying on weakness, right? So that's what he talks about there. The next page, he said among his principles was the buying and selling of stocks when the 5 period moving average cross above or below the 20 period moving average. Um, yeah, that's a really short term five. I don't use 5 day period moving average, but some people do. I usually use the 10 day, and we'll talk a little bit about that later too. Um, so that's one like this book he read. That's what that person used as a strategy, and he talks about how he studied William O'Neill, and learned about the cup and handle pattern. He also talked about Jesse Livermore, which is one of the most renowned trader in history, because he was able to make lots of money in a short time, like $3 million in a single day in 1907. Um, And then in 1929, Livermore made a whopping 100 million shorting the market, right? And his book Reminiscence of a Stock Operator talks about all that stuff. Um, so so yeah, he's just talking about how he studied from other, you know, previous people. Um, Page 31, at last technology. By the late 1980s, I bought my first powerful computer. By that, I mean a machine that could play tennis pong. In addition to putting real-time codes right on my desk, the computer allowed me to create a database and give me access to more information. So he talked about how he started to, able to use computer to get stocks in real time and stuff like that. So that was back then. And then he talks about putting the findings to work. So boom in technology, consumer retailing, healthcare in the early 1990s transformed obscure companies into household names. And using what I learned during the 80s, I was able to catch some big movers that transitioned from 1990 bear market into a new bull market. So he talks about like US Surgical, MGen, American Power Conversion. These are all company names. Um, and Microsoft, Home Depot, Dell, International Game Technology, Cisco, all these were able to display strong fundamental and technical characteristics. And many investors miss these companies because of their relative high price to earnings ratio, which is the PE. In chapter 4, which I'm reading right now, it talks like basically he identified this almost in every example. So where people will not buy high PE ratio stock because they're too high price, right? So um, he kind of talked about it briefly. In 1991, 40 top performing stocks started at about $12 a share. Those are the stocks that he's looking at. Um, Began the year with average PE of 29, which is pretty high, right? Because the average in S&P is usually 18 or something like that to 20. And by year end, the PE ratio has expanded. So this is in 1 year, 1991, expand to 83. So that's like almost, you know, 2.5 times, okay, in 1 year. So next page, he start talking about SEPA, the strategy of precision, and he identifies five, I think, yeah, 5 or 4 key points here. 5 key points here. Trend. Virtually every super performance phase in big winning stocks occurred while the stock price was in a definite price uptrend, right? So, and that's something I really, really follow. I always follow stocks in the uptrend. If they're in downtrend, I kind of stop looking at it. Eventually they'll come back and then build another uptrend. That's when I start following them again. Fundamentals, most super performance phases are driven by improvements in earnings, revenues, and margin. So I usually look at earnings and revenue, not so much margins, but margins is a big reason why a stock can go up a lot too. So, but usually earnings and revenue is a must for me. Catalysts, every stock should have a catalyst, like companies, for example, a new hot selling product, or some, if it's a medical stock, it usually is approved by FDA. You know, uh, there's something new, right? Basically, and IBD for all this, pretty. It's one of the most important trades. Like, there's gotta be something new, and then they talk about companies like Apple, Google, all these, companies that make new products, obviously, or new drugs. There's gotta be a catalyst for it to go up that much. Number 4, entry points. Um, Most super performance stocks will not only give you one opportunity, but more than multiple opportunities to catch at a low entry point. Timing the entry point is critical. Timing your entry incorrectly, you'll be stopped out. And lose big if the stock turns around and you fail to sell. Time the entry correctly during the bull market, and you could be at a profit right away and on your way to a big gain. Right, so that's very important. Timing the entry. 5, exit points. Not all stocks display super performance characteristics will result in gains. Many will not work out, even if you place your buys at the correct point. Establish stop loss points to force you out of losing positions to protect your account. And some point, you must sell to realize a profit. The end of what was once a super performance phase needs to be identified to keep what you've made. Okay, so again, coming back to those three main points earlier, you need to buy and sell at the right point. So it's very important. He talks about his SEPA ranking process, how he has a trend template shown in chapter 5. Um, we haven't got to there yet, but basically and he lists a whole bunch of bullet points here, and most of the things are very important, like earnings, sales, even the history, whether it's growing, is it accelerating, both on earnings and revenue. He talked about any guidance from the company. He also talked about any revisions, not just estimates from analysts, but also any revisions of it. Again, he talks about margins. He talks about where is the whole industry is at with that type of service or product. He also talked about, is there something new? What is the catalyst again? He also compare other stocks in the same area of the sector. And then you study price and volume. And also he talks about liquidity risk, whether, is it easy to liquidate if you have to sell, stuff like that. So he also talked about institution volume support. Is there institution buying this? Um, and is there supply demand imbalance? So if there's lack of supply, meaning lack of shares, but there's lots of demand on the shares, then the price could appreciate faster. So he also talked about that. So yeah, so many of these things he tried to identify. Um, and then he said at the bottom, I don't step out to identify precisely the point at which I can place a trade and to have the lowest risk and highest potential for reward. I execute a trade only at the point of alignment across the spectrum with the regard to company fundamentals, stock price, and volume activity, as well as overall market conditions, right? So again, fundamentals, technicals, and then market conditions. Next sections, page 36, super performance trades. At the bottom, more than 90% of super performance stocks began their phenomenal price surge as the general market came out of correction or bear market. Interestingly, very few stocks have super performance phase during a bear market. So, so again, like you gotta be in a bull market to catch those. Not many stocks will rise up during bear market. Um, their super performance are youthful. Generally, a super performance phase occurs when the stock is relatively young, within the first 10 years of the IPO. So, it doesn't have to be super new, but usually it's within the first 10 years. IBD usually use 8 years as their rule of thumb, but, it doesn't, like I say, they're still growing, they're still, trying to become a dominant player in the marketplace. During the bear market correction of early 90s, I focused on stocks that was holding up well, which we want to talk about today. Because we're in a pullback mode, we want to find stocks that are holding up well, move into new high ground first off the market's low. Most of the names I trade were relatively unknown at the time. Okay, so that's also important. Like, usually these new names are going to be like new names. Like these stocks were propelled by characteristics such as big earnings growth, strong product demand, and then he gave another example about U.S. Surgical at that time. Size matters. He said super performance stocks are often small cap companies, although occasionally a big cap name would see a surge in price after a turnaround or a period of depressed stock prices resulting from a bear market. Most of the time, where small cap, mid cap stock hits periods of accelerated growth, which in turn create a super performance price phase. Again, accelerated earnings and sales. That's what he's talking about here. Next page, all things being equal, a small cap company will have the potential to appreciate more than a large cap based on the supply of the stock available. It will take far less demand to move the stock of a small company with a comparative small float than a large cap candidate. If a large cap company advances rapidly in the short period, I'm inclined to take profits on it more quickly than I would with a smaller, faster growing company that have the potential to double or even triple in a number of months. So that's interesting, right? Like, it's not easy to do, I know from my own experience, but as a general rule of thumb, that's how he thinks of small cap versus large cap. taking profit faster on large cap. Um, Stock screening criteria. He talks about you must be careful not to put too much into a screen, otherwise you inadvertently eliminate good candidates that meet all your criteria except for one. If a stock meets 11 but misses by a hair on the 12th criteria, you will never see that stock. A better approach is to run separate screens to screen for, say, relative price strength, or screen based on earnings and sales, stuff like that. And then um, you know and then you have to do some manual, you say, roll up your sleeves and do some old-fashioned manual analysis on your own, right? Don't just count on the screen. Um, Make a commitment. So the last section, he just saying, make a commitment to your approach. So just find what you're good at, and go with that. You and then chapter 4, like I said, we won't go into it today. Um, I'll read the first paragraph though, because I think that's very important. When you think of value in traditional sense, bargains immediately spring to mind. Someone priced higher, something priced once priced higher now is priced lower. It seems logical. Growth stock investing, however, can turn this definition on its head. In stock market, what appears cheap could actually be expensive. What looks expensive or too high may turn out to be the next super performance stock. The simple reality is that value comes at a price. So um, that is very relevant to how I invest, because I'm generally a growth stock investor, um, and so I'm most likely buying a stock at new high price. I'm most likely buying a stock that have high PE. So that's where we at, right? Where I'm at. Um, yeah, yeah. We always tend to do that, right? We always say, "Oh, is a stock going to new low? How can that be?" And but it's a bargain, right? So, um, yeah, it's very interesting. We're gonna look at a few things. Let me just bring up my notes here. Um, so Nasdaq right now is. Oh, sorry. Give me a second here. Thank you. How's that right now? So right now, this week it's a short week, but it's a bad week. I think um, at least when I heard on CNBC, it's the worst week since September of last year. It was down. Let me see. How much is it down this week? It's down 3%. Um, and you can see here. I kind of have a. Let me see. It's loading still, but you can see I have like two arrows here. Last week, it was bouncing off, near the 21 day, and then this week it opens up and closed below it. So that was Tuesday morning, and that was not good. Right there was the cue that something's not right, and then it has gone down since. Thursday, it tried to rebound from the morning loss, and then Friday it gapped down because of the PCE report. So definitely the trend is not good, right? We have a downtrend, as we kind of saw that last week, and it continues on this week. Now, you know, do we need a catalyst to turn this around? I don't know. Probably. But one thing I noticed is Wednesday, Thursday, Friday, it didn't close at the bottom range, which is very interesting. Um, they all seem to close at least near the half range or the upper range. So there's some buying happening, right? But overall, there's still more selling than buying. But the good sign is that there's buyers coming in at this junction here, which is near the 200-day line. So and here's the thing, the 200-day line is starting to flatten, right? So it's been on a downtrend for a long time. Now it's starting to flatten. We want to see it go flatten and then turn up. That's what people are watching for right now. So the more the market can hold at this level, the better it is, right? So obviously we don't want it to go below 200. That would be a technical, very bad technical negative. That would be the big test here. But Friday it closed almost at that level. Um, so that's the so again, we'll have to see if there's any new news coming out. you know, but it's very fragile right now. I think IBD has it on under pressure now. The market is in the condition of under pressure, which means you shouldn't be buying stocks right now because it's very risky. If you have stocks that you're holding, you watch them and see if you want to take a profit if you have profit, or cut some positions, blah blah blah. But right now it's we are on a strict downtrend. The 10 days trending down. The 21 day is starting to trend down. 50 days still going up. Like I said, the 200 day is flattening. So the 50 day and 200 are converging right now. So that's a good thing. At some point they'll cross. So really, if we get a bounce here, it's going to be a strong bounce because 50 days gonna, like I said, 50 days gonna. If we get a strong bounce, like 50 days gonna cross over 200 day very soon, within like a couple of weeks here. And that seems to align with like some people think that based on the cycle of the seasonality and stuff, January February is the down month. We started early this year, February 2nd was the peak, but usually if you look at seasonality, it's usually mid-February when it becomes the peak. But this year we started like almost 2 weeks earlier. So normally end like first week of March is where the downturn ends in terms of seasonality. But it could happen earlier because we start 2 weeks earlier, right? So I don't know. Okay, so that's Nasdaq. Any question on this one? We'll finish. Yeah. Yeah, I think this is the next big challenge, I think, right? Like if we fall under this, like honestly, a lot of people would like, you know, not just people, all the algorithms will trigger and we'll see more selling, right? Um, and that's not good. So, like like S&P right here, see, bounce on Friday off the 200 day, which is good, but like I say, it's still on a downtrend. It could, we could have a gap down on Monday right below the 200 day. So we have to be mindful of this, and so that's why if you start new position right now, it's very easy to get stop out on a downtrend. So, uh, yeah, it's better to wait for this to clear, unless, like say, unless your stock is acting really well, and we'll talk about that too. But in most cases, most stocks follow the market trend. So that's S&P. This is the most clear one to me because it clearly bounced off 200 day on Friday. That's why um, it's important that it hold this level, and we will know, right? Like I say, if we can hold for a few days, even a few days, right? It doesn't need many, 2-3 days. Then hopefully, then it has the confidence to bounce back up. But right now is a big test. Look at Dow. So Dow, I feel like Dow is the worst index right now because it broken the 50-day hard, right? This is the big down day on Tuesday. And so, but the thing is, it hasn't quite get to the 200 day yet. So will it go another day strong down and then bounce off it? I don't know. So this is the scary part here because Dow is like, it broke this trend, right? That was the problem. It broke this trend. Well, I guess it kind of hold near on Friday still. Uh, yeah, I think a lot of people will be watching this level 32,500. Right now it's 32,800. The lows was 32,600. So it came pretty close on Friday to breaking this low. But really, the trend line that most people were looking at was the 200 day line. So right here, because Dow has been above it for so long now. That's the longest one out of every index. So if we break this line, like I'll be pretty negative. That's for sure. Because like after staying above it for so much, like since November, like if it goes back down, like I can see it going further, right? Like which will be testing the previous low in October. So that's the scary part. And this may come, right? So I think the market is waiting for, I think the next Fed meeting around March, like first week of March or second week, I can't remember. Um, that decision may spark this so this movement. Either you're gonna come back up if Fed say, hey, things are we're gonna just keep staying at 25 point hikes for or is it going to be like, oh, we need to reassess, we might go, even if they don't go zero point 0.5 this month, if they say anything along the line that we may have to be more aggressive or or keep hiking more, then market might continue to go down, right? uh, so that's the scary part right now. I'm again, the glass is half empty, half full right now, so it depends how you want to look at it. We um Okay, so this is Dow. I'm gonna come back to S&P afterward, but because David Ryan mentioned that it has retraced 50%. But here, this is IWM. Okay, IWM is the strongest index in my point of view. You can see it's still above 50-day. It's still way above 200-day. Um, yeah, so small caps are doing really well compared to the other index, which is very surprising. So this gives me hope. Okay, this gives me hope. Because normally, if we're in a bear market, IWM will be leading the downturn, but it's not in this case. So it's actually the opposite. hmm So we'll see. Like I said, behind the scene, things are looking better despite Friday's downturn. Like we'll talk about in terms of stocks in a second. Um, so I'm gonna come back to S&P 500. So David Ryan was saying how we'll go look at the weekly chart. And what he said was, we have gone down from here to here, and the market came back to exactly 50% retracement. So 50% of this drop. So from here to here is about 50% of this drop. So now we're finding resistance at 50%. He's again same thing. I think he's saying like, we need to find support at this level here, right around near the 200-day. Otherwise, it's gonna test the lows, right? So that's the next big move. So, but I don't think, at least unless there's a catalyst, which like I said, Fed could be that catalyst to push it back down, right? But I really don't. It's the For me, I feel like the chance of that happening is very low. But it can still happen, like 25% chance of it happening. But to me, 75% chance for me, that's how I feel, is most likely going to bounce. Um, and yeah, so volume is, well, I guess we 1 day short, so volume is still okay. It's not like super high. We have this one big up volume here. So that's the index. Um, yeah, any question on the index? Yeah, I think we had you know, very critical point here. But Friday was a good showing. Like I said, Thursday, Friday was generally, even though Friday was a gap down, Thursday, Friday, they didn't close at the bottom range. But, but but on the big picture, we're still on the downtrend, right? So that's, you know, we're gonna make a decision very soon whether we will bounce. Because this one thing I like about this is it's a very tight range. It's not like um, so meaning like it will make a direction pretty soon. And I don't know. It's possible it stays sideways until the Fed meeting. Like it could stay like this. But I don't know. It's only like I think like say March 8th, right? I think. Or March, what was it? Let me go run the screen right now for when the next Fed Watch meeting is. Or maybe it's late in the month. Okay, March 22nd. Okay, so it's still quite a while away. Interesting. Yeah, so that means they'll have another PCI report. Obviously, this whole month of January is what's what scares people right now is that inflation has gone back up, um, which means it's no longer disinflation, right? So, what's Fed gonna do? But the market hasn't changed that much. It has still pricing in 0.25, so from 450 to 475 on the low range. So a quarter point hike. May 475 to 500, so another quarter point hike. But they did price in June now for another quarter point hike. So 5 to 525. So three more heights of, and so that will reach 525 to 550, which is pretty high because I think Fed was only one. Yeah, I think this is even past Fed by a quarter now. So so the market is pricing this in. Will Fed be even more aggressive? It's very hard for them to do it because um, they went from 75 to 50 and now to 25. If they have to roll back to 50, market is going to tank, and I don't think they want that, right? So most likely they'll just keep it at 25 and then maybe have to raise longer. Uh, like right now the market is already pricing into June. So does that make sense? Yeah. So that's what the Fed is going to be looking at. Let's see if there's any news coming out this week. Yeah, the market is pricing in. So we're gonna stay at July. Like, let me see here. So 525 stay the same. September 525. November 525. I think December is where the market pricing. Okay, now see the market no longer pricing in a drop. It's still 525. So that has changed. So this whole year, market is not pricing in a decrease, right? So previously, I think last week when we saw it was pricing in a decrease in December, but now it's no longer pricing that. So basically, like I said, it got delayed by a month, right? By a meeting, basically. So the market's view is that, at least based on this, the market view is that, hey, yes, uh, a lot of people still think inflation will come down hard soon. Um, yes, we have. So we have 1 month of hiccup right now. January it went back up, so it wasn't a smooth linear line, right? People want to see that smooth linear line go down, go down. Every month goes down, right? But January it shot back up a little bit, so more than expected anyway. So now it shot back up, and now the question is, it gonna go back down again. So that's why, um, I don't know. Maybe market may be more looking at the market may be looking at things glass empty right now, half full glass and half empty. I mean, meaning the more pessimistic, right, than opportunistic. So it's possible this downtrend could continue downward because of this, and the decision won't happen. That's the thing. We still have 3 weeks before the Fed would do anything. And we have the PCI report again, and it's going to make a difference, right, where things going to go. And so the market has pulled back to exactly where it's comfortable right now, the 200-day, knowing that the inflation has, come back up. Now, like for me, I think there will be a bounce. Even if this is a downtrend, I feel like it's kind of corrected, quite a bit now. 4 or 5 days of down, 6 days actually, 5 or 6 days here, right? Is negative. So like to me, it's a little bit oversold a little bit. So I feel like there might be a couple of good day bounce here, and then maybe it will start to go back down again. I don't know. Uh, so um, that's my take on it. Um, at least for this coming week. I'm not. I'm more optimistic. I feel more optimistic this week, this coming week, than because we have such a bad week. Every time you have a very bad week, usually it bounces back the next week, right? Usually, unless you have a catalyst. Like I say, I don't think there's any more catalyst this coming week. Everything has kind of been priced in now. So we have pending home sales here on Monday, Tuesday. Uh, we have retail inventories, wholesale inventories, home price index. So that's usually important. But again, that has been on a downtrend for a long time. Um, let me see what else. Manufacturing, ISM. So that's important. But again, that also been on a negative, you know, recession style number for a long time. Jobless claim is always stay around this number now, 200,000. Um, hasn't changed much. So I don't know. I like ISM services. So we have services. So this will be important for inflation data, related data. So market might react to this on Friday. But yeah, there's not much news like that could, I don't know. But yeah, market is seeing the glass half empty right now, so that's the challenge. Let me see the next week. Is there anything big? Yeah, unemployment report, right? So this unemployment report is in March 10th. So it's not this coming week because I thought it was this coming week. It's actually a week later. Interesting. So for 2 weeks, there's not much data, like important data, right? Like I mean, this is probably the most important IFSM service this week. But there's not much things going on. So I don't know. I feel a little bit optimistic because of this. I think all the negative news been priced in this week, and we might see a bounce now for a few days. That's what I hope anyway. Um, but if the market does break the 200-day, even without news, I think that's very negative. You know what I mean? So I'll be watching for that. So because the momentum is going down. So if there's no news and it still go below 200-day, that's actually even worse because uh like that means there's no support, right? At all. So yeah, that's S&P. So again, with S&P, with Dow, again very close to 200-day. This one is very, Dow is really weak. Like I can't believe how weak it is. This downtrend slope is very slow, like really down, right? Like it's not like a 45-degree angle. It's like this is like 70% degree angle. Um, I don't know what's going on there. Nasdaq is at 200-day, but this 200-day is still on a downslope, right? It's more likely that 50-day is the more of the support line than the 200 because that one's downslope. Um, and finally, like I say, Russell is strongest. Um, 50 days above 200-day. So this is like a true uptrend, you know. So and then yeah. So we're pretty close to this this. So we have this up, and then hopefully we have this up again. So that's the uptrend we want to see. Um, yeah. Any questions on that? Let's pull up 10-year yield. So the Friday was really shocking, right? Like I thought this Thursday when the market reversed and bounced back up, I thought this is it. I thought like, hey, this might be the downturn of this 10-year yield. But then Friday, because of the PCE number, it jumped like 8 points in the morning. Um, good thing it didn't close at the top, but still, um, like this uptrend is still intact. The 10-day line is right here. So that's the scary part. Like this thing keeps going up, there's no way the market could rally. Um, but I think like the 4%, you know, like think about this. Mid-December was the uh yeah, around there. It was close to, yeah, after the mid-December meeting, it jumps and then it fell down. So, we already passed this middle point here. And that's the tricky part. Like now because of this support, again, I thought it's gonna go back down, but it didn't. So now it's gonna head for this level. right? Based on technicals. So that's the scary point. Yeah, because now it's like clearly above it. So that means it could go all the way to here, right? So that will push the market below 200-day for sure. So I hope this doesn't happen, but right now it's not looking good. Um, the market make a decision on Friday to stay above that line, that middle point. Um, we'll see. Even if it doesn't, like, as long as it doesn't keep going up, like even if it stays here, that's still a good sign. And then eventually roll over. But I don't know. Right now, it's not looking good. The other thing that's happening is obviously the dollar. Again, look at how strong Friday is, like super strong. Now we coming to this resistance line, 200-day. So you know we'll see. Like it's pretty crazy. If it does go above it, it's not good. So we are at a critical juncture here. This coming week, either it's gonna find some, bounce above this, or and the market seems, like I say, the yield, the dollar, every market seems to be reacting to these two things right now, correlated, right? So, um, I'm trading my portfolio based on these two, right? If the U.S. dollar is strong, if the 10-year yield is, continue to goes up, like it's almost like I shouldn't be buying any stocks, right? Um, and then if you are buying stocks, then you need to see these two come down. But right now they're both on the opposite trend of the market, so it's not good. It's not good. But we are hitting this critical point. If it does go above it, it's not good. That means we're gonna head down to test the previous October lows. So, but I'm still optimistic that this is as far as it goes. If we look at stochastic, um, the problem with stochastic is, it could stay at certain level for a long time. So like if I like, I can't draw it out, but you can see where my cursor is pointing. Even though it comes down like right here, it could stay at that, like at the negative for a while, right? So here, same thing. It dropped, it stayed at negative for a while. So just because it has dropped so fast, and you think it must be near oversold, but it's not, right? It could stay, the stochastic could stay negative for a while, and then the index could continue to drop. It might not drop as fast, but it might still drop. So that's the scary part. Um, and you know, we are about halfway now. So not quite, but almost, like, probably 40% drop from this lows here. So um, again, um, yeah. So that's the stochastics can be very important. The one thing I don't like, and they were talking about this on Tuesday on IBD Live, um, is they were using the CNN Fear and Greed Index, and this index seems to be very good in most cases identify um, um, turns, and so it combines like many indicators into one. So here's market momentum, price strength, price breadth, put call options, market volatility, safe haven demand like bonds, right? And they combine it, and then they get this number here. And right now, people are greedy, which usually means people are still buying, right? And so when we look at the timeline, here, right here, February 2nd, it was extreme greed, 79, and then the market turned, right? At the bottom here, people were fearing 32, and market turned, right? And then here again, extreme fear on October low, 15, and market turned. And at the top here, greed, 70, and then it turned. But right now, we're still very high, like in terms of greed, 59, 60, even this whole week. Like, I'm surprised it didn't drop much. So people are not fearful at all. So this is like the kind of almost like a quadrillion indicator. So this is not good, right? Um, so if you're looking for a market turn, at least this indicator is saying, people are still greedy, so people market might continue lower. Yeah. So this one is quite important because it has been very accurate, right? So here, same thing, extreme fear. Look at number three, extreme fear. This was back in like early May, right? So yeah, yeah, I just want to bring that up because you know the chance of it going lower is pretty high based on that indicator. And like I said, and then even the stochastic, we need to stabilize, and but doesn't mean it won't keep going down slowly. Like it could still go down slowly, and yeah, because people may not. Here's the thing, right? Right now, I think because inflation, this is what happened. This last few weeks, market did not expect the inflation to go back up, right? Everyone, January was like, oh, soft landing, soft landing, soft landing, right? Like inflation will go away and everything will be good again. But now, all of a sudden, after 2 weeks of data, three different pieces of inflation data came out and they all show that it goes up. That's not good. That's not good. So this means that the Fed is not going to ease, just like the market future show, right? If there's no easing this year, it's going to be hard for business to grow because the growing costs still growing higher. And who wants to take more risks? And that's why probably more companies are planning more layoffs going forward, right? Because if they can't grow, the only way to improve their earnings is by cutting spending. So that's not good, right? So, which means if they're cutting more costs, laying off more people, that means the economy is going to get weaker as people will have less money spending power. So then you almost certainly, that's why a lot of analysts still believe they're going to go into recession. But again, all this happened in like 2 weeks, right? Because of the data, changed all of a sudden. So before that, it was going on a strong uptrend. And now the last 2 weeks because of those data is going on a downtrend though. So um, we almost going like it's kind of scary because it almost feel like because of this data, it almost feel like wow, inflation not going away. Wow, is this the beginning of another downturn, right? Of a bear market. So it's possible. So we have to, the market at first didn't want to believe it, and I think the first data came out. I can't remember which one. Market didn't believe it. It was holding strong for a few days, and then now it's rolling over. And now it's starting to believe those data is telling the truth of where the market is. So that's the scary part. So so the risk is getting higher and higher. Any more inflation data comes out and it shows stronger inflation, market is going to be like getting more and more worried, more and more fearful, right? And coming back to the CNN fear and greed indicator, people are not fearful right now because they think inflation is over, right? But maybe not, you know. Um, so again, um, I'm not saying it can't go up. It's just right now, I think we have to be very cautious now. Um, and we're gonna look at stocks, and again, many stocks are at like they have pulled back, and it does provide a buying opportunity, but we have to be cautious because if you do buy, I would definitely put very tight stops, um, because if it does roll over those moving averages, it's gonna go down a lot further. So, but yeah, there's a high chance it will bounce too. So I don't know like what's the best route. I think it's gonna be no one's gonna know. But right now, like I said, the downtrend is there. You want to follow the downtrend. Don't fight the downtrend too much. Otherwise, you're gonna get stopped out for sure. Yeah, yeah. Any questions on this? Um, yeah, the one, like I say, what I think one analyst was saying how a lot of stock gap out in January, um, even February from some earnings. That's a good sign, but we're still in early stage if this is a true bull market. Um, so yeah, let me see what else there is here. S&P 500. Yeah, okay. So long-term uptrend, 200-day meeting, short-term uptrend. Um, yeah, yeah. So this is coming down. 50 days going up. 200-day is still kind of going flat right now. So yeah, but I think that is less important right now. The key is it has to hold this 200-day. That's the most important. Um, One of the chart that CNBC showed was the ACWX versus SP 500. And so let me open this, and then I'm going to put ACWX. So ACWX is the whole world without US. Now, why is this important? Let me show you. So we start from the beginning of the year. So we see that the red line is ACWX. It outperformed US very strong, right? But what happened? ACWS as the downtrend, like I think this was probably early February, near February. It started to go down the world index, but the S&P went down less. So now they're at the same point. You see, right? So S&P has caught up to the world because at the beginning of like January, it was lagging. Um, you know, and now it has caught up. So that is very interesting. Um, so So it means like because at the beginning of the year, a lot of people say, "Oh, emerging markets or other world markets are better than investing in US," but that's not like very quickly, right? Like it's no longer just the case anymore. Um, so that US dollar going up is like a big correlation to this, like kind of influence on this happening. So that's very interesting. You know, so hopefully. Hopefully the US dollar will, won't go up as much, but I don't know. Hard to say. But right now, everything's at a critical juncture. Um, yeah. Look at some other index that people follow. So this is the cloud index sector. Um, it's holding up pretty strong, right? So we have a strong. These are all the tech stuff we're going to look at right now. This has a strong run. And then this is pretty tight actually. This pullback. So again, we went up, this much, but it gave up this much. So it's like 1/3, right? When you look at it, it's almost 1/3, roughly, slightly more than 1/3. So it gives up, 35% of its gains. That's not bad, and now it's kind of going sideways. So this is what we're talking about. Like when something pulls back and is holding tight within a small range of the gains it previously gained, that's a good sign. And so right now, this is also at the 200-day downtrend right here. 50 days going up. So as long as like this is the same scenario for many things. As long as the market can hold, the 50-day will catch up and cross the 200-day, and that's the bullish side right there. So we might still be like another week or so before this crossover happen, right? So uh, so that's what we hope to happen anyway on the bull side. And I like this pattern because it's like a nice long cup, like a saucer base, and then it built this nice handle. This is like a perfect, like more like a saucer than a cup. but it's a perfect saucer and handle pattern. So trigger point, usually I would buy is like, I would, you know, draw this from the top to the bottom. This is the angle. If it pass above this line, that's your trigger point. That's the early buy point. So that's the, and there's lots of stocks in this. I think Monday, Fastly, App Loving, Docu, what's that called again? Gen or something. C3AI, Sumo. A lot of high beta names are in this cloud computing sector. The more like the ones that obviously that also been very strong is semiconductors. Yeah, so same thing, very similar. Obviously, these are even more higher slope, but again, I think so far it has given, not as much, So here's the range from here to here. So like again, from here to here and here to here, it's like less than 40% for sure, 35% roughly of giving back. And even this Thursday and Friday was strong. Look at that. It's not near the bottom, right? It's like more at the top part. So even on Friday, it's like it's not that bad. So hopefully this week it can break out. So again, this is the line right here. This line. If it can break out that line, that'll be a buying signal, which is very close for chip stocks and stuff. The software side, let's look at IGV. Okay, looks more the same as the cloud computing, probably a little bit flatter in terms of slope, but similar, right? So if it breaks above this upper trend line, that's a buy signal, which is coincide with the 10-day right now. So um, yeah, so these three areas is three sectors in the tech world is pretty important to follow, I think. Of course, if you look at even more beta, like art fund, I guess similar. Uh, yeah, it's very similar actually. This one is trading pretty tight too. I'm surprised. So I know there's a lot of red bars here, but the fact that sometimes it's okay to see lots of red bars. No, well, it's not good, but at the same time, it's trading very tight here. So like it's so tight that I can't even see how much it moved on a given day. So it's a good thing, but again, this price is a little bit suppressed, so that's probably why from the drop, right? So anyhow, again, I would draw a trend line on the upper channel line here. If it goes past this, probably a good buy point. So that's ARC. Um, let's run so one thing I do want to point out that was really weird was Friday. A lot of stocks were down, right? Let's go back to home here. A lot of sectors were down, but one sector was up, financial, right? Yeah, very surprising. But yeah, let's run a comparison screen for financial. I mean for sectors. I don't think anything has changed much, but it's just good to point out that was happening on Friday. Okay, so we'll change the date here. So we have so things have come down. I think last time it was 14%, 15% for consumer discretionary, still leading. Um, Communication service second place, very close. Technology 9%. Retail 9%. So those are the top four. They still continue to lead. And then yeah, so nothing has changed there. See if this semiconductor can bounce here. I don't know. I just don't like the 10-day going down right now. Usually when they start going down, they don't usually turn right away. You know what I mean? Like right here, right? When it goes down for a while. Like, like 10 sessions here. So we just at the beginning. So it might be another 5, 6 session of going down. Like this is the part I don't like, but we'll see. But it's also, it also means that it's performing better than the general index, right? So we go back to like Nasdaq, for example. So here's the, like Nasdaq is much closer to this 50-day than the semiconductors are. So that's what I'm talking about. So those are performing slightly better than Nasdaq right now. And we know why, because like if we look at the big caps, they're not doing as well. Amazon, see, this is already below 50-day almost. Google, look at this. Google is way below it. Microsoft is slightly above it. So this one is probably the closest to Nasdaq. But but they're all on a downtrend. Apple. Okay, Apple is actually the strongest one. Wow. It's still way above the 50-day. Um, okay, so Nvidia. Yeah. Oh, the Nvidia got a big jump on earnings, right? Again, the AI trend is very strong right now. So if we draw this line right here, that's the slope. So that's pretty good slope. Yeah. So it has a big, range. Yeah. So we'll see. Even Friday did well. I was surprised. Like even after Thursday's big drop, big rise, Friday it didn't close at the bottom. So that's really good. Again, part of the semiconductor group, so it's outperforming Nasdaq right now. I think I'm missing one. Which is the other one? Google, Apple. Anyhow, I think I'm gonna look at Tesla too. Tesla, yeah, same thing. So Tesla is really interesting because this is really tight. Also, it has a higher low so far. Um, yeah, this is really tight, like chart wise, and it has a higher low. So that's usually a good sign, very good sign for from a technical perspective. So I like this chart. Yeah. So I think also like March 1st, right, is the investor day. So there's some hype. There's some hype there for sure. Um, I don't know if it's true, but I read that they might unveil something even cheaper than Model 3. Um, yeah, I don't know. But whether yeah, so I don't know. We'll see. But the chart wise, out of all the big caps, this is like the best chart right now. Holding up the strongest. So um, Netflix. I'm really torn about Netflix because of the the sharing password thing in Canada, right? Uh, so this one dropped below 50-day. I don't know if there was news that day, but it's not looking good right now. Um, yeah, but the sharing password thing is, creating lots of commotion in Canada. So we'll see how that ends up being happening. But this is not looking good, this chart. Um, yeah, like I, you know, like for example, we look at some AI stock like C3 AI. Like surprisingly, after a big run, this is a pretty big run, and it's doing a pendant formation, right? And usually that can be bullish because as it breaks out this pendant pattern, it could be a really strong move. Um, so we'll see, but it's like it's higher highs again. See, higher lows. So that's a good sign. But it also making lower highs. That's why it has this pendant pattern. But but right now AI is the hype, right? Just the Nvidia. So um, the other ones that are people follow is more smaller, like Big Bear. So again, same. This one is definitely weaker because you keep going down. Somehow I don't follow this as much, but people do follow them somehow. Yeah, somehow. Okay, this one, it's okay. Again, it's holding pretty good, like for after the gains. Um, yeah. Any stock you following right now? Yeah, we can jump to that one. SMCI. So last Friday, it closed weak, and we were saying that it most likely will pull back more, and it found support. Well, Tuesday, Wednesday continued to drop. So here was the the trick. This was the critical juncture here. 21-day support. Is it gonna find support? And it did. Thursday it bounced 8% that day. So here's another thing, right? The volume is really drying up here. Look at this. Oops, wrong way. Right, it's drying up. So those are really good signs. Um, and then volume came back in Thursday, Friday, and higher volume, right? And the thing that's worried, like even though it's so minor, like but for me, I find it very important is that it closed not only the so right here high 97, 96, it closed above that 98.16. So this is for me, this is like um, very very important. Like to like meaning like what I'm trying to say is like it should follow through next week, right? Like this, like once this happened, people who didn't buy, they're most likely gonna miss this now. Like next week, this is my expectation. I expect it to move fast now. You know, that's what I expect. Like I expect it to move. Sorry, let me get my like pretty fast. Like that because of this close right here. Because whenever you close on the week at the top range, usually, I mean, it could digest, but it already digests, right? Like this is last week when this breakout, it came back like right and digest already. This part right here, and it tests that, and now the big buyers are coming in. Thursday and Friday. It's like okay, this is a good time to buy. They came in, look at the volume, it's higher. They're like okay, so people enter. And now, the other thing is very important too is like it took 3 days to go down, but it only took 2 days to gain it back. That is super bullish, right? That's usually only the more demand. Like there's way more demand than supply. That's why that happens. So now, like I say, if you miss this buy point, you're gonna have to pay for higher price. Like I mean, there's still a chance it could come back, but what I'm saying is because of that close on Friday, people are saying, "Hey, I'm willing to pay higher price now." So this is what I expect. This is the slope now. Just like this slope right here, this is this is even a lower slope than this slope. So I expect to go at least 45-degree angle, something like that. This coming week. Oh, we'll see. Um, so this part right here could have shaken out some people. This pullback, but it's a normal pullback. It's like a 7%. I don't know exactly. It's close to 8%, 7 to 8% pullback, which is normal for most stocks. And so from a weekly perspective, you know, broke out this cup. Again, now we're on the 1, 2, 3, not counting this week inside week. From the lows here, 1, 2, 3, 4. We are on 4 weeks up right now. And we talked about this before. Last time went 6 weeks. And then this one also went 6 weeks. So, and they both went up, oh, this one didn't go up 20%. And yeah, this one didn't go up 23. No, it did, it did. It did go up 20% because that's how the base recount on this tool. So we went from stage 3 to stage 4. So it did went up 20%. So now we're on this uptrend now. And, the last two times we make 20%. But we'll see, right? The market is really choppy right now. That's the only reason. But the good thing is RS rating is moving up strong and it already surpassed the previous point, right? So this is like This is relative strength is really strong. So, you know, this whole week is a sign of strength for SMCI. Like, it's just really strong. Low volume pullback, high volume rebound. That's exactly what you want to see. But most stocks this week are pulling back still, but this is one of the few stocks that are bouncing despite that. So yeah, yeah, RSI is slightly different. Yeah, this tool doesn't have RSI. This is basically relative strength. It compares against, um, I believe it's the S&P 500, right? So, so there's two here. There's the line and there's the number. The line is comparing against S&P 500, so it's outperforming S&P 500. And the number is comparing against other stocks. So it means that it's outperforming 98% of all stocks. Does that make sense? Yeah. So so some people use RSI. That one is like more for overbought, oversold condition. That one is more similar to the stochastics. But I think the formula is slightly different. Yeah. So um, but now we're hitting this round number near 100, right? So that's whenever the stock hit nice big round number, watch how it acts, right? That's where you will either find lots of resistance or you will find lots of support. You know what I mean? Um, and so if it pass 100, and you know that's my expectation. If it pass 100 next week, watch for it how it acts around that number. Usually, usually you will find resistance because it's a big round number. People who bought it, you know, even 4 or 5 months ago, they're like, you know, they're up, you know, let's say from 50 to 100. Now they're up 100%, right? So we will see some sellers for sure. So we'll probably see higher volume around there, that level. Um, but let's see how it acts around that number. If it like, you know, hold there for a couple of days and then bounce to like higher, like 102, 103, 105, that's a really strong sign. Like that it wants to go a lot higher. You know what I mean? So the key is we don't want to see institutions dumping the stock at 100. That's the key. So right here, see, it's continued to go up. Um, this is exactly why the stock keep going up, right? It's because institutions keep buying. So as long as we don't see those, like, because round numbers are always a big thing for stocks. So we'll see. Either this is going to become a, you know, just like the name, super performance stock, or you know, it may top out at 100. I don't know. We'll see. Um, yeah, but in general, like this is by far one of the best stock, right? At least on my list, I find. You know, really strong performance. Um, Next quarter, I think it's still pretty high. Can't remember. Let me see if I can find it. I think it's still pretty high, 70% or something, or maybe like 50. Oh no, 28%. Right. But this is probably a low ball number. So yeah, we'll see. It's going fast. Um, so that's SMCI. Um, I did start my first position on LGM. Um, you know, you can see this is a really strong breakout right here. 3 weeks they make 23%. Now this is, you know, this is why like pullbacks are good, because you know you don't want to chase the stock. If you miss the beginning, like it's hard to chase it because you don't know how far it will pull back. And this is one of the few that pull back very little, right? So you can see it pulls back, but it's only like really small pullback, and it's finding support near the 10-day. So um, you know, this is a 10-day right now. So it's going sideways, while this other thing is catching up. 21 is catching up. So I don't know if we'll pull back more, but so far the action is pretty good. Like technically, it's really strong. Yeah, this this earnings is going strong, sales going strong. Um, Again, very similar to SMCI. Look at the institutions coming in quarter by quarter. It's accelerating, right? So these are names that people starting to pay attention to. Again, RS rating super high, high sky, like Jim Rope always called it skyscraper volume. That's how you know institutions are in there. Look at where it closed that week, right? At the end, this is what I'm talking about. When a stock closed strong on the week at the top, look at this one. It went up 2 more weeks, right? You go back to SMCI. Look at this. Close strong. Again, volume didn't show because it was 1 day less, but technically it's probably higher volume. So like I said, that's why I expect the next 2 weeks to be like this, going up. So very similar chart, except this is already ran up before, but now it's pulling back, like very tight. I'm not saying it can't pull down more. It could. Again, right now everything depends on the market. That's why it's a very risky because the market is weak right now. But the volume, look at this volume. Oh yeah, it's Thursday. It's 1 day less so. But probably, let me see. The average is 67 and 51. Okay, it's about average volume. I also took a position in LSCC. Right here, pull back. Again, skyscraper volume. RS rating near the top. Earnings going pretty good. Sales going pretty good. This one, it has a drop last year, but now slowly coming back. So 50, 50, like it's an increment of 50 institutions. See, pretty fast. 11 billion, 82, right? So future, so LGM is growing at 70% next quarter. LSCC, let's see, 35%. So those are the estimate for next quarter. So as long as they keep beating those earnings, the stocks can go higher, I think. Yeah, very strong technical performance. This one pulled back harder than ALGM, but it's holding at 21 day now. So while this guy is catching up, so we'll see. Yeah, those are the tech stock. Like there's lots of tech stocks. Let me look at this week's filter screen here. Let me pull out. Is there any other tech stocks you want to look at? SQ. Yeah, SQ. SQ is on my list. Let me see what it is. Oh, it didn't show up. Okay, probably. Yeah, I think it's probably negative earnings. Yeah, lots of volume. Look at that, right? Bouncing Thursday, Friday because of the earnings report. Yeah. So I'm pretty sure, it's like, for me, I don't touch negative earnings expectations for next quarter, but it looks pretty good technically. See, I don't even know if I have it on my list. Let me just add it. See if it's on here. Just want to see what the forecast is. Pretty sure it's still negative. Huh, where did it go? I don't know where it went. It's here. I'll have to find it later. Um, yeah, look, sorry, go ahead. Go ahead. No, no, it doesn't. Um, yeah, let me try one time. Sometimes I scroll too fast and miss it. Oh, right here. Okay. Yeah, 100%, which means it's break even on a negative number. So, oh no, okay, you know what? It was 0.18. Yeah, it's good, looking good. I don't know why it's not on my screen. SQ. Go to my tool for a second here. See if it's, why it doesn't show up. Here you go. It's number 68. Right here. Yeah. So, hold on a second. This is not the chart. It's still below the 10-day, so that's why I think it showed downtrend. Yeah, but it's near it, right? It's near the 10 and 21 day. So, you know, it's trying now. Trying, like, the volume is there, so that's good. And weekly volume. So this is still a downtrend, right, on the weekly chart. Um, but it did bounce on the 50-day. Like I said, it's still below the 21-day. Volume is good. Yeah, it looks good. The numbers are 100%, which means it'll be 36 cents, which is pretty good. Yeah, it does. Yeah, it does. Yeah. So right now, most charts will look like a company candle, you know. So again, I think right now the market is the key, right? Where the stocks will go. So most stocks are going to follow the market. Um, so this one, like last year, it dropped a lot. Institution support. It came back up this quarter. Yeah, it's not the strongest ratings, but it's getting better because it really didn't move until only the last 2 days, right? So yeah, so it's like I say, the fundamentals look better now. So we are at a critical juncture here. So again, breaks out of this trend line, looks good, right? So yeah, but unfortunately, it's still on a downtrend, even after those two big updates, which is interesting. Yeah, I I don't like stock that are below um the trend line. Also, like I don't like it when on big days like that it couldn't pass those upper trend line. You know what I mean? Normally, like for example, like if I go back to like I don't know, let's look at Palantir, like because I think that one is a slightly better stock. Um, like right here. So when you have those big up days right here, it should already pass the trend line, the upper trend line. You know what I mean? It's the same thing right here. Like when you have those big up days, you should already pass the trend line, upper trend line, like right here, right? And even those ones can fall back. You can see, right? It falls back, right? But with SQ, it's like it hasn't even passed the upper trend line, which is like, and those are on big up days. So it's just like a little bit weak to me from a technical standpoint, right? So for example, another one I like is Dyna. These are obviously names that are gone down a long time. So this is the upper trend line. So there you go. When you see the big volume coming, it should pass that trend line. Like this is much better looking, right? Um, you know, even this is really tight. I'm surprised how tight this is trading. So that's good. It hasn't give back a lot. Um, yeah. So I like when I see a volume comes up big time, it should pass the upward trend line. Because if it doesn't, you still have that huge resistance, and it's going to take a lot more effort for that stock to go up above that. And if it like basically on good news, it has to pass that. If it doesn't, it's going to have more trouble. Does that make sense? Yeah, yeah. Any other stock you like? Let me see. So we talk about CC, SMCI, uh, Intel, Fastly. Yeah, Intel is really strong. Like I need to like it keep it's near the top. Um, yeah, it's holding really tight. This is wow. This is super tight. It didn't even touch the 10-day. That's how tight it is. Amazing. Like this is so strong. Oh my God. Yeah. I mean, it's getting closer and closer to this trend line here. So it's gonna either it should make a move soon, um, or it can break down further, right? Those are the two things that can happen. This is financial small cap. Okay, so this, this is like the sweet spot right now. Financials, because on Friday it went up, right? And the small cap also leading the market. So yeah, this is a tear. This is a giant. Um, yeah, let's see the next quarter. Yeah, and okay. Oh, oh, it's probably in the negative zone. So okay, 100%. So this is break even. So negative zero point 0.4 is gonna be zero next month, next time. So break even. Yeah, it's okay. It's probably a turnaround story. It's turning positive, right? Positive, positive. So small cap. Oh, this is in the software. Interesting. Cloud-based AI powered software solutions. Wow. Yeah. I haven't seen IBD talk about this stuff yet, but anything with the AI word in it is is pretty hype these days. So yeah, something to follow, I guess. Yeah. So it's like number two on the list. So it's gotta be doing well. Let me see. Monday Pi, STM. Yeah, Pi I think rebound on Friday. Oops. I took a short-term position on it. Um, yeah, it's not very strong, but we'll see. It's, you know, um, it's the first blue day in many days, but it's not a strong stock right now. It's not a very strong stock. Us rating is kind of going down a little bit, but on Friday I was looking for stocks that are acting well. Um, because it's such a bad day. Like it's not super bad, but it's bad enough on day. Any stock I see that is green and showing strong, I like to, take a risk there. Um, STM Perry, AYX. Yeah, STM is another big closest. It's another big chip stock. Um, yeah, it's falling back to 21 day, but this is a sharp, you know, uptrend, right? Very sharp. And skyscraper volume. Look at when it goes down. Look at the volume going down, right? Exactly what you want to see. Um, what was I going to say? Earnings. It's okay. I just want to see what the forecast is. Okay. Um, let's see if it's 20%. So it's not bad. It's not like super fast, but 20%. So if we closer to $1. Um, yeah, it's growing, right? So um, still young, like 43 billion, but there's not many institutions. Interesting. 136. Yeah, it didn't go up last quarter. Uh, oh, this is a stock owned by Buffett. He's selling this, I heard. Now I remember. Yeah, he owns this and he's starting to sell the shares, the last report. Oh, today is Buffett, Berkshire reporting today. Uh, let's see if there's any big news. Falls 8%. Cash hoard swells to lots. He had lots of cash. Look at that. Yeah. So, um, yeah. So that's a value stock, right? A lot of people associate value with that company. Um, okay. Any other like tech stock you want to look at? People will switch. So Fastly, big 4-day run. Now it's pulling back to the 10-day. Pretty good. Lots of high volume here, and then the volume is starting to dry up here, and holding at 10-day. That's like it's probably one of the best ones, and that's why you can see from a price performance like number 3 here. So really good. Monday. Look at Monday. Yeah, this one even rebound already, which is fun, interesting. So again, looking very good. Some of these stocks are surprisingly looking very good. So yeah, look at 8. Yeah, 8. Let's look at 8. And this one has been kind of going down slowly. Right now it's trying to hold 21, slightly weaker than the other two. Yeah, but it's overall it's still good. Like the 50-day right here, this is the big one. 50-day and 200-day. Look at they crossing each other now. So and this and the price is still like quite above that, right? $5. So lots of cushion here, but yeah, like these are all high beta stocks. So um then I don't know. I don't want to say they're not leaders, but they're previous leaders, right? And um, you know, I much prefer names that are less, that has dropped that much because these guys have dropped a lot. So it's easy for the high beta names to bounce back, and then but they can easily go back down. So, but at least these ones are better than a lot others. I'm just looking at this. Like all these highlighted with the white triangle are the ones that are potentially bouncing, potentially, right? So, you know, there's a lot. The one thing I don't like right now is a lot of stocks are on a downtrend. So, that's the scary part, right? So lots of stocks are on downtrend. Like Alto, right, is one of the few that report this week is on an uptrend. Um, you know, this is very similar to Nvidia. Like, report good earnings, bounce. So now they have a slightly different pattern than most stocks. So, you know, but again, if markets start to pull down, it's going to pull this stock down. Mhm. Yeah. So yeah, those are. So obviously, tax getting hit right now. If we go look at retail, um, let's look at Miniso because it's the strongest here. Pull back. This is very tight. Look at it already bounced. So that's why I'm saying some stocks are already bouncing before the market bounce. That's strength. These are the ones that have strength. Look, RS rating almost near high. Um, yeah, you know, but earnings coming out soon, so be aware of that. EPS due 3 days. Yeah. So IQ, um, leisure movies. This is Chinese company, but look how tight this is trading. Oh, it says 21 million. Yeah, it's holding pretty tight. This is a strong uptrend. Look at this dry up in volume right here. Wow, look at this. So yeah, looking really good. Um, Win is pulling back. Found support on Friday at 21-day, but it's still on a downtrend. So right now, like I say, a lot of stocks are below 10 or 21-day. It's very tricky to buy when they're on the downtrend because you could get chopped up. Elf, I really like this stock. I added a position for long. Um, Look at this bounce. like it didn't even close 3 red days touching the 10-day. All 3 days close at the top. Like that's support. That's like, people, yeah, one is low on the selling side, but it's just how tight. It's like this is the tightest I've seen in many stocks. Look at how tight that is. Yeah, Elf, like, the earnings are really powerful, 100%. Let's see what's next quarter. Um, let's see here, 38%. So, you know, um, last time, so I missed it last time because last time it was at 0% estimate, and then it came out and went up more than estimate, 100%, 108%. So they obviously, like this story here, something is fundamental is really happening. When you beat your estimate by 100%, it really means that something is really changing, right, in your business. So it has, here's the thing, like this stock, you look back a year, it doesn't even look like there's a bear market, right? Look at this high scraper volume. Look at this. Look at all this high scraper volume, right? Except this one day, which is this day right here. I don't remember what happened that day, but other than that one day, this is on a tear. This is like, I would even say this is stronger than all the chip stock, right? Like this is something is happening to this company. It's still small cap, but Elf, I can't remember where I heard it. It's like the next Estee Lauder, is what they call it. Yeah, Estee Lauder is 86 billion, right? And ELF is only, and this is after it ran up so much already. It's now 3 billion, for 3.9 billion. So it's like it's a small company still, but they're saying it could have the potential of becoming like a global recognized. I don't really know their line of cosmetic and skincare, but that's what some people say. So right, like I said, at the beginning I didn't buy it because their estimate is 0%. But then they come out, like how many companies beat their estimate by 100%? That's incredible. So see, people already know this story before the numbers come out, right? You know, so people who knows the company well already have inside some knowledge about it. Not necessarily inside knowledge, but just having research knowledge about it. I don't know anything about it, so that's why I didn't buy it. But this stock is on a tear. Like this is a rare merchandise. That's why I have to get for my long position. Now it's risky to buy at this level because we're not buying out of a base, right? Like the right point is to buy right here, right? On this day. But I miss it, so I have to wait for it to pull back, and it's not pulling back. So, you know, I have to take a risk now to just add one position so I have something. If it does fall back more, then we'll see, like, how it falls, if it falls further. But, you know, um, yeah, it's this is a rare one. Like I have to say this is pretty good. Okay. Um, TEL and EDU, like both Chinese stocks, like education companies, are they trading these two stocks? Right now, it's starting to bounce back up. You know, it has this run, like it's a trading stock. I like trading this. When it's on the run, it run really well. But right now, it's like it's trying to come back up. So this is my, you see, I set this trigger right here. EDU, yeah. So this one, look, right now I don't like the pattern. It's like what do you call a microphone pattern, which is like instead of converging, it's diverging, so it's getting more volatile. But the 50-day is coming, on a really high slope. I like very few stocks do this, right? When the 50-day, like you go look at many charts right now, how many of them actually have 50-day running like that, right? Like probably Elf does, but not many stocks because that, see, Elf is on a long run right now. Like, this is a slope, but you look at LHM, the one that already runs, same thing. Like not many stocks are like this ones. They're already running high. But the good thing about EDU is that it's coming back to this line here. Most of them don't even come back to this line. So it gives you opportunity to get in if it's gonna bounce. But like the thing about China is they open up, right? So and China very very, how do you say, very focused on education, right? Like parents like to focus. So now that it's open up, like every kid will be taking more courses and stuff. So like they like doing like extra like besides school. This is outside of school, right? And they're doing like taking more courses and stuff. So yeah, it has lots of room. It's very volatile, though. That's the only thing about this two stuff. But they're really performing. They're at the top. Las Vegas, another casino, Royal Caribbean, right? All these consumer discretionary are doing well. Peloton, Booking just reported. I think they did really well. Um, yeah, so bounce right here. So it pulled back, tried to pull back, and then it bounced on earnings. It didn't close that much off the 10-day. That's the only caveat, but I would watch it. Melly also reported this week. Um, yeah. So what I noticed about this, right? This is in Brazil, I think, or Latin America. But look at the volume here. Look at the dry up in volume as it pull back. Also, I think the earnings is very powerful. If I go look at the forecast, I think it's very high. Let me see. It's at the top. Yeah, 81%. It's pretty high. This is not a small cap, I think. This is, yeah, 58 billion. Growing at 81% earnings. So that would be like about two something. So yeah, it'll be in line with previous growth. Like that's a fast growth. Like, and it's a big cap. And this is like Amazon basically of the South America. And look at the institutions going, right? 99 composite rating. So that's pretty good. 93 RS rating. Yeah, I like this. I like this. It's on my radar right now. This is a good trigger point Friday. I don't know why. Thursday I was like trying to look for stocks, but I forgot to add this to my list, and then Friday I totally forgot about it, and I miss it. Yeah, this would be a good day to buy as it bounce out of that. I like buying stocks bouncing off the 10-day because that means it has that support line. Less chance of pullback. Yeah. Um, one of the trader on IBD Live was talking about APTV. Uh, let's talk about this one. Auto truck original equipment. It's a nice run. Pull back to 21 day. Now pull back to 21. So it's testing this 21 day twice now in a short period of time. It's a nice long double cup base. Yeah, pretty strong. Look at this volume here. All the selling volumes is pretty low. Um, almost 100% earnings. Let's see next quarter. 43%. 2300, 2391. So it's jumping pretty fast right now in terms of institution support. It's like almost like, yeah, it's kind of large cap. And yeah. So this is interesting because like again the truck group, some of them are doing well, which means um it's kind of represent a little bit about the economy. So that one's doing well. Tapestry Plant took a position in Planet Fitness. They report earnings this week, and it's very volatile though. Look at this. report earnings. 2 days of high volume. Friday it pulled back. Unfortunately, it did. So we'll see. It's very volatile, this stock. I think a lot of people are watching this stock. That's probably why it's so volatile. But the numbers are good. The fundamentals. 50%, 100% earnings. 32% growth next quarter again. Last time it beat by 12%, over 12% estimate. So yeah. Yeah, anything retail you like or not much? There's Hyatt, AD&T. But yeah, eat restaurant. So I know, let me think. Wing, oh yeah, Wing I took a position. Restaurant is doing well. Wing also very volatile. It pulled back after the earnings. Um, so it gave back quite a bit. But again, this is why you don't chase stocks, right? Like in a bad market condition right now, like I wouldn't say bad, but poor market condition, it always tend to come back to the 10-day line. So always draw the 10-day line and see how far is off it. The further it's off, the higher your risk of buying it. So uh, that's the best trick I have to say. You know, do that every time before you buy because it gives you a perspective. Like sometimes you're like, oh, I like the good news, right? But then you see it always pull back. Nine out of 10 will pull back. Very few won't pull back. Like the few that doesn't pull back, we already saw earlier, right? ALGM. See, when it bounced, it never come back to touch the 10-day for a long time. Like ELF, same thing. It bounce. It take a while before it comes to the 10-day, right? So, you know, but that's like 1 out of 10 cases, right? But there's so many stocks that always pull back. So it's like it's a risk if you're willing to take that kind of odds. So all right. Eat. I haven't looked at this much, but I think they just reported as well. Oh, not, okay, a week ago. Okay, this one is more volatile. You can tell the chart is probably harder to trade because you probably easily get stopped out unless you have a bigger stop stop loss percentage. Um, airlines, airlines are also volatile lately. I realize. Um, okay, it bounce, come back. It's holding the 10-day. That's a good sign. So ever since this run, this like many airline stock did a 10-day run. This one did like what roughly eight days run, but a lot of airline stock did a 10-day run there, and then they all kind of. So this is the jets. So here's the run. Went sideways, go up higher. It fell. So here, even though it's supposed to go up higher, but market pull back February 2nd. Now it follows the market condition going down. So now it's at critical junction 50-day. So again, we've seen many stocks getting either close to the 50-day or already at the 50-day. And where it goes next is very important. So yeah. But like for example, yeah, Peloton. Let's look at Peloton just because. Yeah, so you can see it has now fallen below 10-day, fallen below 21. It's still trading very tight, but if it goes all the way back to 50-day, a lot of people will be losing money for sure. Because yeah, this is hard. Um, that's why whenever like this is a I think very good lesson. Whenever a stock run fast, even if it's a 1-2 day right run like over 10%, you should always take something because you can't expect it to like run forever, and that's one thing. And second thing is like like so this is a good example because you're giving back a lot, right? Almost all of it, depending which day you buy it. But if you go back to like for example LGM, let's just say this is not as crazy as that one, because it only ran, this one only ran up like 20% in a few days, whereas that one ran up a few days, ran up like 30-40%. But my point is, if you have those big days up, this one doesn't have, like, probably this day is slightly bigger, but even then it's not very big compared to those days where it jumped over 10%. So but even if you did sell here, you can always buy it back, right? Like I said, you should always take some profit when you have a big up day. So that's pretty much it, I think. Is there anything else you want to cover?